Hey, what's going on, guys? This is Greg Helbeck here. I just want to share with everyone a quick video on three things you guys can do now because the market is changing that you guys can go out and use in your own businesses and make you more effective. So I'm making this video right now in mid-December 2018. And over the last few years, as I've been in business, we've really seen a very hot real estate market. So what we're seeing now is that the market is definitely not crashing, but it's certainly getting a little flatter. So I want to share with you guys three things that you guys can do if you're investing in real estate that will help you succeed in today's market. So the first thing is going to be avoiding doing properties that are on the high end side. So what do I mean by that? I mean, a lot of markets are going to have, your medium price point, your low price point, and then your high price point property values. So a lot of people who are getting in trouble now are buying properties well above the median home price point, and they are trying to renovate the properties, and they're getting stuck. And the reason they're getting stuck is because there's a very limited amount of buyers for those types of properties, especially when the market now is changing. So if you want to make sure you get yourself, safe and secure, if you're going to buy, renovate, and resell properties or buy and rent properties, you want to make sure you're buying the median house price point or under right now. So the first tip is avoid the high-end rehabs. Second tip here is to have more than one exit strategy. What do I mean by that? I mean that every time you're going to get a property for an investment, always have at least two exit strategies. And I want to share with you guys a quick example on what I'm doing personally. So we do a lot of wholesaling and wholetailing. And before we implemented the wholetail strategy, which is when you basically just buy the property and put it on the MLS, we had one strategy, and it was just to either assign the contract or do a double close. Nothing wrong with that strategy. It's a great strategy. But we were starting to run into situations where we just couldn't wholesale the properties, so we had to either buy it or it wasn't going to be a deal. So now what we're doing is we're having at least two exit strategies on most properties, and it's really making us more effective out there in the marketplace because we can offer on properties and sometimes beat out some other investors because we know we're not going to wholesale it. We can pay a little bit more and actually buy the property and list it. And then the third tip I would share with you guys, and something that I'm doing and I'm being very aware of, is trying to make sure you're staying as liquid as possible. So a lot of our exit strategies are quick in and out properties. We're wholesaling or we're wholetailing. We don't have a lot of money on the street, or not too much money on the street to say. So what I'm doing is I'm really trying to save as much cash as I possibly can by doing these shorter term investments. And I want to stay really liquid because in a year or so, when the market definitely takes a certain downturn, and obviously I don't have a crystal ball, but once the market takes a substantial drop, if that does happen, and a lot of people are saying it will in the next year or so, I want to be as liquid as possible to buy all those properties on sale. So save your money, try not to have all your money on the street. So let me recap those three tips, and I hope you guys have a great day. So the first tip was to make sure that you're not doing the high-end rehab stuff well above the median home price point. The second tip is to always have more than one exit strategy. And the third tip is to make sure that you guys are trying to save as much possible as you can, so when properties do go on sale, you have the money to buy them. Hope you guys have a good one. We'll talk to you soon. Bye-bye.